responsibility for managing fraud back in-house. Hence, I moved into central government. So I work now for the Public Sector Fraud Authority, which sits within the Cabinet Office, but reports to Cabinet Office and Treasury. We sit at the centre of government and the centre of the counter-fraud function. My day-to-day work is the overseeing of building a strategic risk or fraud risk profile for all of government spend, which I'm sure you can imagine is quite an undertaking. So I've got lots of experience in fraud and fraud risk, and hopefully I can add some value to the committee through that as well. But thank you very much for the welcome. I really appreciate it, and I'm really looking forward to getting involved. So thank you.
Thank you, Chris. We're delighted to have you with us. So item 2 today is apologies for absence. Ian, have we had any apologies for absence?
No apologies.
Thank you. I understand we may be waiting for Councillor Howell, but we'll proceed with the meeting for the present. Item 3, declarations of interest. Do any members have any interest to declare in relation to items that we're considering today? Councillor Sanford.
Thank you, Chair. Just my usual declaration as a non-remunerated Director of Ermine Street Housing. Thank you.
Thank you. Councillor Stobart.
Chair, thank you. So I'd like to remind the committee that I'm a board member of South Cambridgeshire Investment Partnership, otherwise known as SCIP, and also South Cambridgeshire Projects. And SCIP does get a mention today, so I just wanted to underline that.
Thank you. Councillor Stobart and I did discuss this briefly before the meeting. We've agreed, obviously, as the committee's not making any decisions directly relating to these investments, and we're merely kind of discussing the history of them. My advice was that it was more useful to have Councillor Stobart in the room than see any reason for him to be outside of it, unless anybody feels strongly otherwise. Okay. Councillor Williams.
Just that the Greater Cambridge Partnership is referenced, and I'm a member of the Assembly.
Thank you, Councillor Williams. If any interest subsequently become apparent later in the meeting, please raise it at that point. Item 4 is minutes of the previous meeting. Do members have any suggested amendments relating to the accuracy of the minutes for the meeting held on the 5th of December 2024? No, I'd like to move approval of these minutes as a true and accurate record. Are you happy to second? Thank you. Any objections? Thank you. So we agree that those minutes are an accurate record of that meeting, and I'll sign those after the meeting. Item 5 is public questions. There are no public questions today. So we now move on to the substantive agenda. We're going to slightly change the order. It's effectively item 9 that we're going to take first, matters of topical interest, because it is under this item that we're going to consider the reports from KPMG on the recent audit. So could I please, so I should clarify, these two reports were circulated, I think, earlier this week, so you should have received notification that copies were available. Please let me or Democratic Services know if you don't have immediate access to them. So there are two reports, about 60 pages in total, from KPMG. Delighted to be welcomed by Mr. Cardoza of KPMG, the lead audit partner, who will take us through these reports. Thank you.
Thank you, Chair. Thank you, everybody. Apologies for the late arrival of the reports. We were trying to work as far as possible to the deadline so we get as much done as possible so that there's less and less of the to be completed element. The first report is a report that you've seen already. It was the plan. So the plan was always a live plan for 23-24. So part of this was to bring to you the final report of that plan, to update it right until now. So I'll take you through that briefly. But most of especially the important recommendations are in the next report. So I'll pick the recommendations up in that report. So yeah, so the first thing just to note, materiality hasn't changed at 1.5%. You are a brand new audit to us, so we've lowered that percentage. When we get more comfortable with an organisation, we can take it as high as 2%, but it's at 1.5% for now, which is a £1.8 million materiality level. But again, one of the things I talked to you about was anything over 97,000, we would bring to your attention any change in the accounts above that. In terms of the significant risks and other audit risks, just on our page 5, you can see the valuation of land and buildings. Again, as I explained, there's a large number in your accounts. We have to look at that. Valuation of investment property, again, a large number and something that we take quite seriously. Management overrider controls, again, that's in every single audit plan across every single audit firm for every single audit that any firm undertakes, because management are in such a unique position to be able to manipulate the accounts. So we have to look at that as part of a fraud risk, which your new member will know all about. Valuation of post-retirement benefits, again, the pensions work that we do. Again, one of the things I promised you, which was good, was that we would not be relying on your pension fund auditors. We would do the work ourselves. My pension fund accountants and auditors and the actuaries that we have working for KPMG have undertaken that work directly with the pension fund. And apart from a little bit of extra clarifications that they have to undertake, the work has been done. So again, nothing there from your pension fund that's held at the County Council would impact on our audit now, which is good news. And then expenditure recognition, because again, in terms of recognising the right expenditure in the right year is really important. Other areas of audit risk that we identified was obviously the preparation of group accounts, opening balances, and then the recoverability and accuracy of investments. So those are some of the areas that we have to look at, and we looked at in detail. The value for money element, I'll come back to that on page 20 and talk you through that in some detail. The rest of the pages just take you through the detail of what we plan to do and what we have done. So again, it's there for information. It hasn't significantly changed from when we last spoke. And on page 14 is some of the other areas that are important to us in terms of the revenue rebuttal. So one of the things that at most audits, revenue is the key driver for the audit. For yourselves, because large chunks of your income come from council tax, from business rates and fees and charges, we're able to rebut that. So it's not something that we have to look at in specific detail. It's much more about the expenditure. Then we'll come down to the value for money pages, and the key one to look at is on page 20. And the box there where you can see the significant risks that we identified. Financial sustainability, we didn't think there was a significant risk there. You're quite well funded, and in terms of your medium-term financial plans and how you manage your budgets, we didn't see an issue there. In terms of governance, we did identify a risk, and in terms of improving the 3 E's, we saw a risk, and I'll take you through those. So the first couple of pages on 21 and 22 about the financial sustainability, which, as I said, if you've got the right performance management in place, you've got the right medium-term financial plans, you've got the right budgeting, and the outturns are well produced and well followed through. So we didn't identify a risk there. In terms of governance, again, you've got really good processes in place, especially over risk management. In terms of the corporate management team, regularly review the risk register. The capital program is well reviewed and put together. The big thing for us was about the review of the control environment across the council in terms of the approval of non-PO invoices, which you can see just on page 24. It's the 1, 2, 3, 4, 5th bullet point, just above tackling fraud. And that's where we've made a recommendation, and we'll come back to that in terms of where you can improve on that. There was obviously, in terms of the improving 3Es, there was obviously the best value notice that you were issued with, but we looked through the report, the independent report that was carried out. We saw no significant deviations from what you had proposed in terms of the KPIs. So we didn't think that was a particular risk from our point of view. However, on page 27, and we went through lots of the other things that are good practice that we thought you were doing well, which are on the previous pages 25 and 26. The main thing for us is about the investment recoverability. We talked about this at the last committee when I came and presented, and it is about the recording and monitoring of those investments and how you follow that through. And again, we made recommendations in terms of how you improve that process. Sadly, there's lovely photos on page 29, but again, in terms of the team that we have, it's a public sector dedicated team that understands the accounts, understands the public local authorities accounts, and some people have been working on it continually for a long time now. Well, I've joined from my team in India by Audit, who's joined on the live stream today. And again, we have a whole team based in India that carries out the work for us as well. It's useful to have Audit here as well, but he's been liaising with Fazana and Peter and the whole team at South Cambridgeshire as well. In terms of the following pages on 31 onwards, those are the recommendations raised. I'll come back to those because that's covered in our main report that I want to talk to you about. On page 35 is the fees, and again, you know, there is good news in terms of the additional fee for ISA 315 and ISA 240. I'd proposed 20,000 for those two. The PSA reviewed it and said, nope, you can only charge 10,000. So that's good news for you. Not so great for me. That's the way that it is that process that we have to go through. Talked it through with Peter in terms of what I thought was reasonable. The PSA looking at the bigger picture, looking at all local authorities and the fee variations coming through, said for an authority your size, 10,000 was more appropriate. So that's what we can believe and will believe. We're still in negotiation about the additional overruns. One the actual, one the budgeted from our planning and risk assessment element of our work, but we also have an additional overrun that we are putting together once we complete the audit, which will be about the final accounts work, the significant risks that we have identified on VFM as well, because they're additional that you have to charge for. But again, they'll be discussed with Fazana and Peter, and then whatever we agree will then be sent off to the PSA for them to do an overall calibration and approval process. Confirmation of independence, really important to me, as I've always said, that our team can undertake our work unfettered, totally unhindered, and it has been the case here, so that's good news. That was it in terms of just a brief update in terms of the plan that we brought to you a long time ago now, but it has been updated and brought up to date. So happy to take any questions at that point on the plan.
Thank you. Councillor Williams.
Thank you, and I've had confirmation that the message that I received earlier was to send Councillor Howe's apologies, so if we could make a note of that. Just a couple of things. If I look at page 25, there was a phrase that I've never seen in a report before for this council, and I've sat on audit since day dot in 2018, and that refers to a star chamber. And that sort of concerned me a little bit. So for people that aren't familiar with star chambers, the original one was disbanded in 1640 because it was used as a method for state terror. So as you can imagine, it sort of drew my eye a little bit. And it's also not something that's ever been referenced or come up with before. So is this just a new way of phrasing what's been happening, or do we have a star chamber, and if so, who are the people on it? Because I think to ensure that we don't go back to the sort of medieval version of the words, we ought to have some transparency as to who sits on that. That's my first of 3 points, Chair. Would you like me to receive a response from that first?
I think let's have all the points and then we'll take them as they.
Okay. In reference to the investment monitoring, that's something actually as a committee many of us have been raising for quite some time. It would be good, I know we get to see sort of the headline of the collective return on our collective investments, but it's something that when the first investments were made, actually post that, they would come to audit and corporate governance, so that you could see, because there's one thing about seeing at the start and seeing where it might go, but then you want to know, is it going okay? And the fact that we could have a situation where one investment, because we only see the total, one investment is overperforming, which is making up for an investment that perhaps isn't performing. I'm not saying that's the case, but before, when we used to be sort of go through scrutiny pre-purchase and then comes to audit for a bit of post-scrutiny, if that makes sense. That hasn't happened for some time now, and there have been investments made since. So I'm wondering if it's a possibility, and just to float the idea past committee again, that we should have at some point an annual investment report where we can see a breakdown of how they're doing. I appreciate some of those papers might need to be confidential for commercial sensitivities, and I think we can then have a decision which parts we want to refer to as committee and if we need to go into closed session or not. obviously trying to avoid that. But I do think it's something that's been raised here, and it's something that I know myself and others over the years have referenced, that we need a bit more clarity and to be doing our job of challenging on the finances. So that's my second point. And then on page 39, obviously it's been referenced the fees. I suppose a bit of a frustration that's built over many years is the overruns. What do we need to do so that's zero, and that we're just within that fee? Because it seems we've tried all sorts of different things. We've got new auditors, we've got new scale fees, which are considerably high, and yet we're still having overruns. So what do we need to do on both sides of the fence, as it were, to address that and make sure that taxpayers not having to pick up the bill for it? Thank you, Chair.
Thank you. I might come to you first, Mr. Maddock, if that's all right, because I think you've been involved in those.
Star Chamber seems to be a phrase that's used in a number of local authorities, and I can assure you it's not really related to, what was the date, 16, whatever it was. It's a process that a lot of local authorities undertake to tease out savings and efficiencies. Not actually sure why it's referred to as Star Chambers, and I think me and Fazana have discussed, and I think we probably will remove that word, because I think one of our accountants actually made the same point as you. It brought connotations of something historical that was fairly unpleasant. Now, the Star Chamber process, I thought, was a very good process. It involved all service areas looking at their budgets in a lot of detail, identifying areas where they could make savings or additional income. And I can't remember the exact level of efficiencies, but they were relatively significant, and you'll see the outcome of that on the Cabinet Budget Report. So there'll be a list of all the items that have come out of the Star Chamber meetings. So things like additional income from letting out parts of South Council is one item. There's work going to be done in relation to business rates and council tax to try and increase the tax bases in both of those areas to generate additional income. And there's a number of other savings across the authority. Perhaps the name of the use of the word Star Chamber is perhaps a little bit unfortunate, I think. We could probably come up with something better, if I'm honest, on that. But it was a good process, and I think overall it produced some significant savings that we've now built into our next year's budget and beyond. So it was a good process.
From our point of view, when we looked at the process, apologies for the name that's been used, but it was just what we were told, that's what it was called. I don't think the connotations of a kind of Star Chamber who sit above and over the Cabinet or anything like that, that's not what is happening here. It was purely to discuss the efficiencies, and that was really useful for us to see that there was that additional challenge and additional push.
Right, yes.
So that sounds very much what I was familiar with the process was, that we sort of had single line budgeting in the fact that everybody, it wasn't just top layer, it was sort of bottom up in the budgeting process. So I think having meetings around that, but the way it's been phrased, which I'll say hasn't been in reports before, sort of suggested that there was this meeting, this group of people that were making budget decisions outside of the elected members. So I think that's really important to clarify. And yes, I think I've got no problems at all with officers coming up with efficiencies and feeding in. I think that's exactly how it should be working. But it shouldn't be another chamber, if that makes sense. Otherwise, we'll start to get into difficulties, I think.
Yes, thank you. I mean, it is unfortunately common corporate jargon in this day and age, but but you're right. Perhaps in the context of this authority, we could find better language. I don't know. I don't know, Mr. Maddock, Mr. Cardozo, if you'd like to comment on the overruns issue that Councillor Williams highlighted, and investments. Thank you.
So on the investment, Obviously, we have the Treasury monitoring report that comes here, which looks at those types of investments with banks, building societies. The investments that Councillor Williams is particularly interested in are obviously those investments we've made in property. We do report to Cabinet on expenditure and income compared to budget. There isn't anything that comes here, but I dare say we could, if committee wish to see something more akin to what we do on the Treasury management side, i.e. look at how we're performing in terms of the market generally and what we said at the start. So I dare say we could introduce something. It would probably, I need to have a little bit of think about how we would do it because it doesn't really fit within the Treasury management strategy. We may need to do perhaps an annual, or I don't know, some sort of an update looking at the same sort of metrics in relation to our investment properties as we do with our Treasury management strategy. But what I wouldn't want to do is sort of duplicate something that's going to Cabinet or scrutiny. So, but I think there's probably something we could do, so I'll have a look at that.
Thank you. Yes, I mean, I think an annual report along similar lines to what we see on the Treasury management side would just present a more kind of comprehensive view of the investments, both the kind of the sort of, you know, the listed and counterparty, and also the specific ones that that we've been discussing today.
I mean, I'm just thinking we've obviously got the final meeting of the year in March. I mean, I know we haven't got the outturn position, but whether we do something for that meeting, otherwise we'd be waiting until July. But
I think if we could bring something to March, that would be reassuring to the committee, and you know, we could start. I would start the process of defining how we could see our role as part of that.
okay, I'll make a note.
Thank you. And then I think there's just the overruns question, and then we might. Yes, Mr. Cardozo.
Yeah, so first year, it's taken a lot longer than we expected. I think the fact that EY hadn't undertaken an audit of any substance for a couple of years meant that some of the routine of expecting an audit, knowing what's expected from an audit, putting the working papers together, it's not been forgotten. It's just the habit has been lost. So it was about reteaching, getting people back into the swing of what an audit means and what we expect when we ask for information, the evidence that we expect to sit behind the accounts, and putting that together in a simple way that an auditor can understand. We are not the experts for South Cambridgeshire. The accountants are. They're the ones who understand it. They should be able to take and again, one of the things that took a long time was just mapping the trial balance back to the ledger, back to the accounts. We've done that now. So for next year, that's not going to take a huge amount of time. That will be straightforward. It'll be ready to be kind of pulled off and done before we come. The working papers, again, one of the things that we've agreed with Fazana and Peter is that we will do a workshop working with accountants to go through what we expect, how we expect it to be produced. But equally, there's things that we will learn, that we need to learn and get better at. And certainly Arpit has picked that up with Jess Townsend, the audit manager based here in the UK, and Arpit, the audit manager based in India. And we will improve our processes as well in terms of how we ask for it, what we're asking for, now that we know what you produce. So rather than trying to fit what you produce to what we are asking for, we'll change what we're asking for to get to the same place. So that will save a lot of time. And then there's the recommendations that we've made in terms of the improvements, that will save a lot of time. Whether that gets you to zero in terms of overruns, I can't guarantee that. We're not here to make money from overruns, I promise you that. We have a finite number of auditors. We have a huge number of audits that if I overrun, that impacts on those other audits. Those other partners and directors are already shouting at me now because we're running into our housing and education planning work, which we shouldn't be now. We should have finished by the end of December. The fact that I've still got auditors working now is not a great place for me. It's not a great place for the firm because we're pushing other audits back, and then you get into that kind of cascade. So I want to get to a point where the only fee you're charged is for the standard scale fee, and then if we identify a risk, an additional risk, that is over and above, like the VFM risk.
Thank you. Can you be very brief, because I do want to move on to the actual recommendations, and we've got other councillors wanting to speak.
Yes, Chair. What I was going to say on the investments that you were suggesting, then yes, I think March would be a good, and then we get into that routine as well. Hopefully at the year end that we're looking at those investments. In relation to the fees, I completely understand where you're coming from. I think it's just frustration that we need to get to that place. I would suggest as well that as a committee with officers, when you do that workshop, that we are all in that process as we've done previously. Because I think that then is more beneficial, that when we're looking at the documents and we can have more of an understanding of where things might not be aligned. And I felt that was very helpful when we did that before, and I would suggest that, or urge that audit members and substitutes are invited to any workshops.
Thank you. I agree. I think that would be a sensible suggestion. I think I've got Councillor Stobart and then Councillor Leeming wanting to come in.
Right, thank you, Chair. Just a few minor points and comments. On page 10 and following, we're looking at the risks and change versus prior year. Does this mean that the risk, here the little arrow is pointing upwards, that the risk is perceived to be greater? And then on the subsequent pages, the horizontal arrow is suggesting that the risk we consider as no greater. So I was just interested in what that arrow meant. If I could just mention a couple of other things. Yeah, I know everybody's been talking about the Star Chamber. I remember it being brought up during my university career, and we did remind the Vice-Chancellor that it was associated with people being executed. And we thought it soon got dropped, but I think it does emphasise that the name we give to bodies and groups and panels and so on does really matter. And I think something positive is going to help that process. I mean, we're talking about cost reduction, that can be quite difficult. So let's give it a name which is at least aspirational. And then just a question on monitoring investments, page 38. I know there's been a recommendation and a management reaction, but I was interested in, when it comes to monitoring investments, what is good practice? If we were to get an expert panel from SIPFA, for example, what would they be saying about how we should be monitoring investments? I know various suggestions have been made, but what would that be? What would be the ideal, if you will?
Thank you, Councillor Stobart. I'll bring in Mr. Cardozo in just a second. Can we come back to the investment points once we've gone through the recommendations? So we'll just put a little pin in that for now. But yeah, on the Councillor's first point, perhaps, Mr. Cardozo.
Yes, on the arrows, we think that where it's pointing upwards, that it is an increase on the previous year, on the prior auditor's expectation. Where it's flat, then we don't think there's a change. And obviously, if it was pointing down, then we would think that the risk has gone down.
Thank you. Did you want to come back briefly?
Concerning this assessment of increasing, staying level, decreasing, that presumably relates to the allocation of resources or the particular methodologies that are adopted in that space.
Yes, that's right, and in additional resources put into that and focused by us in terms of the audit work that we undertake.
Thank you. Councillor Leeming.
Thank you, Chair. I have a few questions. There are two of your sort of the high risk things that you've mentioned, which seem to be closely related, and they're both to do with asset evaluation. The first one is valuing our land and buildings, and the second is our investment property. I'm wondering, is this an inherent risk, or is this something to do with how we are monitoring this with our investors? What is it that's increased the risk on the land and buildings this year, when the other one, the investment properties, is static? I'm just wondering what it is that's caused you to flag this as significant audit risk, and what's in our control of what we can because we are dependent on independent experts to value our assets. So what can we do that's within our control to reduce this risk, please? That's my first question.
Very little to reduce the risk on land and buildings because it's such a large number, Councillor. So it'll always be a significant risk for us. The reason it's gone up is because of the volatility in the market that we saw, and when talking to our valuers within KPMG, they've seen a lot of change across the valuation of land and buildings. What we were looking for with the work that you do from the accountants and the information your accountants send to Head and Eve, your valuers, that's really important. So we have to evaluate that and the accuracy of that information sent to them, because as usual, they can only base their valuation based on the information you send them. So we need to look at that, and our valuers looked at that in detail. Then it's about looking at the assumption that those valuers use and whether they agree with our valuers. So at the end of the day, it is your set of accounts, but I'm signing the opinion. So unless my valuers agree with what your valuers are saying, that would impact on my opinion. We haven't had a disagreement in terms of that. They looked at the information sent. They looked at the work done by your valuers, and we were generally satisfied. However, there was still an increased risk from our point when we were planning our work, so we spent more time on it. In terms of investment properties, because that's a lot of money that you invest, because it's based on market value, so not the usual, on your land and buildings, it's based on EUV, existing use value, but on market value, again, it's very volatile. So we had our experts to look at that, because again, it's a large amount of money that you are investing, and you want to make sure that you're getting the right amount of return from it, but the valuation of that in the first place is really key for us. But it was a significant risk for your previous auditors. They'd seen it as a risk. We didn't see it as an increased risk. It was a constant, but it's a significant risk.
Thank you. My second question is also about these risks. I wanted to ask about the accruals. So that was your point 5. It was page 10 of your report and 14 of ours. So this is sort of cut off, isn't it? It's accounting phrase. Is there anything in particular that's caused you concern with how our accountants are measuring cut off? Or is this something that's always a risk for an organisation like this? Is there anything that's sort of made you concerned that our cut-off may be inaccurate? Thank you.
First year audit, getting to know you, getting to know the processes, meant that we were going to include this. And accruals is one of the ways that organisations under pressure manipulate their accounts. So we had to make sure that in the first year, getting to know you, getting to know how you put your accruals together, whether there was the process behind it, which was duly and robustly challenged by management, so that accruals weren't going through that were not appropriate. We found that has been an issue within the accounts, so now it's becoming more normal to have it in as a significant risk. But again, additional work has to be done on it.
Thank you. And then my final question is about page 31, which is the comments on it's page 31 of our report, and I'm just scrolling through 27. Yes. So this is to do with the investment partnerships, the 2 investment partnerships. You stated that when Ormond Street was set up in 2014-15, there was no formal agreement in place. What has been done since this has been discovered? I guess this is as much of a question to the accountant, our officers, as much as to you. And I'm also interested in what arrangements are in place with Skip, because if we are going to monitor these 2 significant investments adequately, we need to have a term of reference to monitor their work clearly. Thank you.
Thank you. I wonder, Mr. Maddock, if you can just answer this briefly, and then I would like Mr. Cardoza to go through these recommendations, which he has not done yet.
Yeah, so the Ermine Street, we didn't have agreements in place. We now have. I need to check whether we've got the final signed version, because there's been a lot of toing and froing. It's taken quite a while to sort of get this sort of nailed down, but we have been working on that with our legal team. I'm 99% certain it's in place. I will double check, but just it is something we have now sorted, because I think it was recognised a few years ago that this should really have been done, and then we've been going through the process. It has taken a while, but we obviously want to try and get it right. As regards Skip, there is again agreements in place that were drawn up right at the start when the partnership was set up, which date escapes me at the moment. It's a while now. But again, I mean, those need to be reviewed on a regular basis, and obviously we're still in discussions with Skip about the land out here, and that's something we need to keep an eye on.
Could I ask that copies of those agreements are included in this monitoring, if we're going to start in March with the monitoring? Yeah. Could we have that as part of the report, that these two agreements are brought to us so we can review them?
Yeah, you can. That sounds like a plan.
Thank you. Mr. Cardozo, would you like to walk us through now, I think, the recommendations and the value for money? I'm sorry, Councillor Williams.
I was just going to say, there was a partnership with Balfour Beatty, which I must admit, it's sort of, so we have the Ermine Street Skip, but there's the Balfour Beatty one as well that was given a lot of investment. I don't think it's progress, but this is sort of the debate, isn't it, around having around the report. So I think it would be good to add that to the list that Councillor Leeming has recommended, and to reiterate the offer from Councillor Howell, because there were reasons why Ermine Street was done in the way it was. So I know he's willing to speak with officers if that helps to give some of the historical context.
Thank you. Councillor Stober, I am very keen. We only have Mr. Cardozo for another 20 minutes, so I would very much like to walk through, for him to walk through. Okay, thank you.
Please come back later.
Thank you. Mr. Cardozo, please.
So I'll take you through the recommendations then. So on page 35 of your report, 31 of ours. So we've raised 6 recommendations to improve the kind of control environment and the accuracy of the accounts, etc. So the first one, again, we've raised a high-risk recommendation. The accounts preparation, again, some of the things that we've talked about in terms of the related parties and the group structure components had not been identified properly in terms of the first set of accounts that we were given. So we make the recommendation that clear roles and responsibilities are assigned from across the finance team to make sure that what we're given as that first draft is much more accurate, much more complete. And again, that kind of accountability should be taken by all team members to make sure that they're checking that. Responsible officer and agreed. This is, you can see on the right-hand side. What we look for is that our recommendations are agreed first and foremost, and then we look for the responsible officer and an implementation date. And again, Fazana has picked up that as a responsible officer and the implementation by March 25, which again helps us in terms of your 24-25 accounts, and you've got the detail of the management response. On the next one, again, a high risk for us is the self-authorization of journals. As you can imagine, from our point of view as auditors, we never like to see that. We like to see that separation of duty. So we'd recommend introducing a control to formally introduce and maintain a segregation of duties between the individual who creates the journal and the individual that authorizes that. And again, agreed by management, and again, a due date. It's a bit longer than we'd like, but it is something that does take time to push through and make and fully implement. So we understand that, but one of the things that we will do is to monitor this and monitor the improvement through next year's audit. The non-PO invoice and self-approval, one of the things I raised earlier, again, you're looking at people who can raise a non-PO and also approve it. You can imagine the kind of hairs that go on the back of an accountant's neck when you see something like that. So again, we don't want to see that, but we recognise again that it's quite hard with an authority that's not huge to be able to separate those duties always. So again, it's agreed by management, but then in brackets in terms of how feasible is it to implement, and again, something we'll follow through as part of our 24-25 audit. On the next one, the control account reconciliation is really important to us as auditors to see those reconciliations done and done on a timely basis. Again, the detail there in terms of some of the reconciliations were taking far too long and been delayed, etc., and some over 3 years, etc. So again, we recommend, especially for the monthly bank and investment reconciliations, it should be prepared on a regular and a timely basis and then signed off by senior management, and especially the fixed asset register, the FAR, because that impacts on a huge number in your accounts and a huge number that you have to maintain. Again, agreed by management, and again, Fazana, Martin, Tracy, and Sean. Again, it's something that will take time, so we're not saying you have to do it immediately. We want it done properly. So again, something that we'll follow through is 24-25. We'll make sure that it's implemented. And we will reiterate it next year, no doubt. Again, the key processes, one of the things that we look for, and again, Councillor, you were asking in terms of what could be improved. These are the kind of things, if you improve this, it means that we can move through our audit quicker because we've got more comfort. So again, the formal process, notes are created, maintained and regularly updated. So something that when we came and we asked about the process and what's the process, then we were having to create our own notes and actually document that ourselves. Whereas the horrible kind of analogy of the London omnibus, if somebody gets run over and that's the only person who understands the process, then you as a council are in a place that you don't want to be in terms of the ability to carry on your service. So you need those process notes that are clear, able to be followed by anyone who comes in. Again, agreed by management. Again, there is a lag to March 26, but that's because it has to be done well. And again, working with others, maybe your peers, to see if they've got process notes and a process that works, that's already there. And then the final recommendation, again, high recommendation in terms of the emission of investments. Again, the lack of controls and recording and monitoring of investments that we just talked about. So again, the introduction of a formal assets and liabilities register, something that happened across many other sectors 10 years ago because of issues across recording assets, which they didn't know, having the contracts in place, that nobody knew where the contract was, nobody knew who was liable if something went wrong. That's not a place you want to be, and especially with the amounts of money you're talking about. So again, that's why we're recommending that. In terms of not agreed by management, again, something that we have to pick up and see what else can be done in terms of making sure that that is processed. That was the recommendations, Chair, on that. Do you want me to?
Thank you. Do you want to go through, well, should we go through do you want to go through everything else in your report, and then we'll do a final round of discussion and questions. Thank you.
So the progress report on page 49 of your pack just brings you up to date in terms of where we are with our 23-24 audit. Page 50, no particular change there in terms of the financial statements audit. Those are the same risks we talked about, that I've just talked about. And the value for money, again, in terms of preparation of the accounts, and then the significant risks identified. Just at the bottom, nothing's changed. On the following page, this is the important page for yourselves, on page 51, so page 3 of our report. So we've completed the work now on 23-24. We've stopped our work. We've come to a point where we have to report by the end of February to be able to meet the disclaimed opinion deadline that the government has imposed. Otherwise, we could carry on this audit forever, but nobody wants to do that. So it's useful that in one way that the government has imposed that deadline, so it makes us have to close the audit down. But it does mean that there are elements of our work that haven't been completed. The good news is that we have completed the valuation of the pensions, like I said, so that's really good because that's a huge number in your accounts. We've completed the work on going concern, so again, satisfied in terms of that. Treasury and debt we've completed. Employees' expenses, that's a massive part of our audit, looking at payroll. Payroll is a massive part of your expenditure. The fact that we have been able to do that work this year will significantly reduce the work that we need to do next year, which again is great news because we can then focus our resources on other areas, all those recommendations that we made, and make sure that they've been processed. Grants and new homes bonus, other non-ring-fenced government grants and business rates, housing benefit grants, we've been able to do that work. Expenditure across precepts, support service charges, contribution, pension deficits and interest payments. Income in terms of investment and interest income and provisions and investments. So those are fantastic things to be able to say to you, because you haven't had that audit done on any of those areas where your previous auditors for the last couple of years. So there's a lot of comfort for you as members of those charged with governance. However, sadly, because of the deadline, and because of the disclaimer issued by EY, the opening balance we've not done any work on. If we did, we'd have to redo the audit. That's not where you want to be. Certainly not where you'd want to be in terms of the cost. Movement in usable and unusable reserves. Again, that's impacted by the opening balance, and unless the government says that's the figure, I'm not sure where. There's a huge discussion going on now across the accounting and audit world with government about how do we get comfort on reserves, because if there's not been audited in the previous year, we have no way of verifying that what's going forward is accurate. What has happened in the past with figures like that is the government has taken a stance and just said, that's the figure, everyone just accept it, move on, and then you start monitoring it as it changes over time. They've not said that just yet. So again, the valuation of land and buildings, the investment properties, whilst we've done lots of work in terms of our planning and risk assessment, we haven't been able to tick off the final figures. It's just taken too long. And then the fraud risk and expenditure recognition work. Again, lots of work has gone on in the background. The final evidence and final pieces of work haven't been able to be completed. The significant challenges to our work, just there on the right-hand side, again, the backstop date, the quality of the accounts in terms of the manual adjustments that were made to the face of the accounts, which there was just an insufficient evidence about what those were and why they'd been put through. Incorrect values in terms of the consolidation of the group accounts, which you talked about. Significant delays by management in providing information to us, again, because that was impacted by prior year audits lagging, then getting into budgeting and everything else that the accountants have to do as a part of their day job, because we were out of sequence. So again, putting pressure on accountants. And then the quality of the audit evidence, again, as we talked about right at the start when Councillor was asking about what could be saved in terms of additional fees. It is about getting better in terms of the working papers, getting better in terms of the evidence provided first time correct. But again, we started that kind of thought process for 24-25, talked about once we've signed off that we will have a workshop to deliver those improvements, but again, take it on board that we will include yourselves as part of that as well. Value for money, again, we talked about this just on page 5 of my report, 53 of your pack. The two significant the significant risks are significant weaknesses at the end of the year that I'll be reporting and be part of my opinion are about governance and about the improving the 3 E's. We've talked about that, but we'll go into that. It's on page 6 and page 7. And then the following pages are the recommendations again, Chair, so which we've talked through. There aren't any new ones. And then we just have to, we were trying to get the actual prior year auditor findings to report to yourselves. The best we could get to is an extract from EY's opinion. So it's there so that it at least closes off the prior year audit from our point of view. And that was it from us. So it might not look pretty, and it's been a huge amount of work, but that page 3 of our report, there is a lot of work done which will take us a long way into 24-25 on a much surer footing with yourselves as a councillor, working with your accountants, and I feel certain as I can, that we'll be able to get a plan out by the end of April this year for 24-25. We'll be then able to do our audit in the summer of 24-25, so July, August, September time. So get an opinion to you by the end of November before your accountants have to then focus on budgeting and everything else that they have to do so that it's in a normal cycle. Sadly, as I explained it to your new member when we were just talking briefly before the start of the committee, and I've explained to yourselves, obviously 23-24 is a disclaimed opinion because they're brought forward. 24-25, sadly, will also be a disclaimed opinion regardless how good your accounts are. because the comparatives that come forward will be based on the non-audited 22-23. So the first time you can have a clean opinion by KPMG, if your accounts are right, is 25-26. But we'll get there. It is a journey, and sadly, building back that assurance does take time. Thank you, Chair.
Thank you, and thank you for stepping us through the rest of your report so clearly. Now, I think Councillor Stobart wanted to come back in, and then I will come to you, Councillor Williams.
Chair, I was just going to make a brief comment, following Councillor Williams' comment about the two investment partnerships, SCIP and SCP. And I just wanted to confirm the fact that SCP, which is the partnership with Balfour Beatty Investments, is still very much active. It's really not consumed any, well, as far as I know, any investment, because it's been a series of discussions, and there's been, if you will, a false start some time ago, but we continue to discuss possibilities. So I just wanted to confirm that it exists and there is activity, but as yet no decision to invest on the part of either party.
Thank you. That's a really helpful clarification. Councillor Williams, I'll come to you for your questions or comments.
Thank you. One of which was just around with local government reform. Obviously, you said you've done a lot of work on the going concern basis, and I'm just wondering what the impact the recent announcements for reorganisation of local government are going to have on that going concern. And thank you for the update. I think my point is we entered, we voted on those partnerships back in 2020, and at the moment there's no mechanism to tell us how they're going. So it's great to hear something's happening, but we should have a formal process, hopefully.
Thank you. Yes, Mr. Cardo, is there any emerging views from the audit world on this issue?
I mean, from our point of view, you are a going concern, and you have got a well-run financial management process, and your medium-term financial plan stacks up, etc. So, if anything, that makes you a key part of any new reorganisation, so that you can show others how to do this, as opposed to organisations out there in local government who are considering issuing Section 114s. And again, the reason you've seen a massive decrease in the issuance of 114s is because, maybe as your new member knows, is that the government has asked, before you get to that point, come and talk to us and we will help you before you have to issue that. That doesn't mean that they're not impacted and they're not struggling, but it just means that there's another step before they have to go there. The fact that you're nowhere near that is great, but then maybe that means that you're at the top of the pack in terms of leading as well, so that you're not having to catch up and chase, which means that maybe you can actually help influence what it looks like in terms of the future. The future is going to be reorganisation. As to where you sit, I was talking to the chair earlier, obviously you're not in the first round, but you're most probably in the second round. And as part of that, you can learn from that first round. I was part of the audit team that took Derbyshire and Derby City through their reorganisation, and it was not pleasant in terms of the two bodies that had the same colour leadership and the same kind of drive to do the similar things, but when it came to splitting up the assets and splitting up who did what, then every man for themselves, or every person for themselves at that point.
Well, that's yeah, that's what it is. Yeah, ask a question, get an answer. Returning, yeah, question, I suppose so. Fine. So returning, so there's a lot of detail there on the recommendations. Are there any? Well, I suppose I wonder perhaps, Mr. Malik, might I come to you just for a comment, perhaps, on how you see the kind of management implementation of these recommendations, and maybe I'd be grateful for your thoughts on, I guess, particularly the final recommendation around the asset and liability register, and the kind of thought process that's going on the management side there, if you wouldn't mind.
So, as Mr. Cardozo said, we've agreed the majority of the recommendations. We've done particularly in relation to the first recommendation. We've done a lot of work. We now do have a permanent colleague to deal with the final accounts process, to oversee and coordinate that process. And historically, we've not had that, and I think going forward that will stand us in good stead. I think the other recommendations, I don't know whether, I mean, design is going to be more involved and has been more involved in the detail, and whether she has anything to comment on those. But as regards the last recommendation, I think the comment we've made at the end, they're happy to discuss this in further detail. I think we are happy to discuss that in further detail. Our initial reaction was that we didn't see what value this would add, but to be honest, I think it's worth having a further discussion in case we're missing something on that point. But yeah, we're pressing ahead with the recommendations. I think it's fair to say, you know, the last few months have been quite challenging with budgets and doing the audit, and I'd like to think by this time, sort of next year, you know, these will have pretty much been implemented. Anything you wanted to add at all, or Zara?
Yeah, I was just going to say, in terms of the last recommendation, we have been discussing with internal audit, and neither management or internal knew of a system, so it's not completely off the table. It's just to have more conversations with KPMG. But we do have a contracts register, and we do have a spreadsheet of investments as well, so it's not, we completely don't have a process.
Thank you. Perhaps it's something, given there's going to be a workshop in any case, I understand, perhaps as part of that occasion, we can delve into that a little further and come to a kind of common understanding of where the value in improving that might be. Does that?
Sorry, Chair. There are some examples that we've got from other sectors, like the housing sector, where we've been working with them from like 10 years ago when they were forced to have a asset and liability register, and we helped a lot of organisations put that together. So happy to work with you on that.
Thank you. I'll come to you just in a moment, Councillor Stobart. Looking at these recommendations, I think I just want to look at recommendations 2 and 3. So this is page 36 of our pack. And I understand, I definitely see sort of both sides of this issue in terms of a lack of additional authorisation in these processes gives the auditors less comfort, and raises concerns, increases the risk of all sorts of different things. At the same time, management has an issue of a small-sized team and not wanting to have business as usual processes that can't operate, as soon as anyone's on holiday or someone's kind of off sick or something like that. I wonder if there are some kind of monetary values or monetary limits that could be agreed between management and KPMG, whereby would give you some assurance, at least, that that, say, for example, significant journals or significant invoices are being authorised separately by the person who created them, and whether that, maybe not even to replace this, but as a kind of short-term solution, whether we could implement something along those lines that would not kind of unnecessarily disrupt business as usual. Susanna?
Thank you, Chair. So the recommendations have been transferred to internal audit register, and we're working closely with internal audit. So I think the first step is to know from Technology One whether we can do the segregation of duties, because my understanding is all 3 authorities who have the same system have the same, where there is no segregation of duties. The second is then, I understand from the team that obviously this could hinder some of the processes in terms of sort of providing up-to-date information. I do come from a background where segregation of duties was implemented by myself, and from a system perspective, so the system would not let you post a journal yourself. But I've been talking a bit more closely with Jonathan, and we've talked about sort of setting values, so where it might be a movement of a miscode, we would perhaps allow the journal not to have segregation of duties, but if it's impacting something, we would perhaps implementation segregation of duties. So I think when we've got a process internally, we would run it past KPMG before that implementation was actually implemented within the team.
Thank you. That sounds like some sensible steps in the right direction. I think see if we can find some balance between, you know, the needs of management and the needs of the audit team on this. Thank you. Sorry, Councillor Stobart, I believe you indicated, and then any further comments or questions.
Chair, thank you. It was really almost a philosophical point about how we look at investments, because when we make an investment, we plan forward and we look for returns. But as we move through the investment process, we're also looking back and we're continuing to look forward. So I'm not quite sure where those two things belong. Perhaps Cabinet and the Investment Governing Board are looking ahead, and we sometimes, scrutiny overview and full council, we look at that. But it would be nice to see a kind of an integrated thing, you know, that we were looking back and looking forward and making comparisons and bringing it to the right people. So it's a thought, you know, if we're going to dig into this, why don't we take a more holistic view of looking forward, as we do at the beginning, and then also looking back and forward as an investment proceeds. So, a thought.
Yes, thank you for those comments. I mean, with the committee's approval, I think I will seek to have further conversations with management and leadership of both political and officer varieties on this issue of investments. I mean, I know, for instance, that the County Council's recently implemented a shareholder board specifically to oversee, you know, as a kind of, well, I suppose a sort of committee of councillors that is there. I guess in our structure it would be whether there's a need for a subcommittee of cabinet or whether it's a responsibility that needs to come here in terms of reviewing investments. But I think I'm getting a strong steer from the committee that this is something that we want a kind of more formal and clearer oversight and responsibility. I think as the terms of reference for this committee are currently drafted, I'm not clear that they fall within our direct remit as it stands. I appreciate that we do review the Treasury Management Report on a regular basis, but I think that is the extent of our kind of notional involvement in this. So obviously I need to be careful not to sort of start abrogating management powers to this committee, which is clearly not which is not a management committee. But I do get the strong steer from you that more thought is needed as to how elected members can best interrogate this issue, shall we say. Thank you. Are there any further comments or questions on this very comprehensive report? Councillor Leaming and then Councillor Williams.
Thank you. It's a practical question. So there's a number of recommendations that have the implementation date of March 2026. Am I correct in understanding that that means by March 2026 everything will have been sorted, but there will be incremental steps along the way throughout the year which should be able to help our auditor colleagues to have some comfort as the time, you know, as the year progresses? I'm particularly interested in the bank reconciliations. I'm wondering, you know, what the plan of the phase of the rollout of that will be.
Thank you. I'm getting nods that it will be, that obviously work will be ongoing rather than left, you know, for a kind of year and a half, but I agree the bank reconciliations are of particular concern. Perhaps Peter or Fazana, you might wish to comment on progress there?
Certainly the point on incremental steps is well made. I mean, it will be building gradually over the year. I don't know whether Fazana has anything to say on the bank recs in particular.
So we've stabilised the team. We're distributing the work. Obviously, we've only just finished with the audit and are coming to the end with the budget process. So we are thinking about preparation and how we can engage, which we normally wouldn't have the time and capacity to do. My understanding is now that we've got a full team, it's been a bit slower than anticipated originally, but I'm quite happy to say we've got a good team, and we've been distributing the work across the team, but it's going to be challenging for the next few months in terms of that training and coaching, and as expected, getting through another year end. My understanding is bank reconciliation is up to date to a certain point, because to train somebody, you don't want to be completely up to date and going through a theoretical process. So that work it will be ongoing, and that's why I've put a date of March 2026 to just give that time and capacity to get to that point and for things to be up to date and working as they should be.
Thank you. Do you think we may be able to have a formal reconciliation sort of 6 months into the year? Would it be possible for us to have a bank reconciliation, the first one sort of 6 months into the year? as a sort of practice run for being in place. I'm just trying to think it would be good if there was something concrete by the time the auditors were sort of drawing together their comments and doing their field work.
So we are working on getting the reconciliations up to date. So we are at a certain point, and then we're expecting by the end of the financial year to have some of those reconciliations up to date. There are some that obviously we're lagging behind on, and we are with the spread of work that should obviously be up to date. What I'm suggesting in the recommendations is to ensure that by March 26th, that we're in that routine of doing those reconciliations monthly, quarterly, and ensure that those reconciliations are signed off by management within the team, and that has been relayed to those involved in those processes. So that's what I mean by March 26th, to be in that routine of doing a reconciliation monthly and not leaving it till sort of the end.
Thank you for clarifying that. That makes more sense. Thank you.
Thank you for that reassurance. Councillor Williams.
It was just to say on the investment things, you're right, it sort of doesn't fall into remit, but I think part of that is because councils weren't set up and designed to become investors and to run partnerships and all these sorts of things. So I think that's part of the problem we have, is it doesn't fit in to the council system because it's something quite new. But what it's going okay at the moment, and that's great. I'm not suggesting it's not. But what we know from other councils that have got into difficulties, it's happened actually quite quickly on these investments, and a lot of the time it's because there's been a lack of sort of scrutiny and challenge and oversight. So while I agree, it might be that we need to review our terms of reference as a committee or something like that, or it might be something that we need to bring through and have a look at as civic affairs constitutionally, because I think it's something at the moment that feels a little arm's length, but actually it is intrinsically linked. It is something councillors need to have involvement in, even if it is the fact that, you know, our representatives give a report back to full council if needed, but it just feels that is a governance area, and I think mainly because it's not it's not sort of, you know, business as usual. It's something quite new, but there is risk attached, particularly in the current climate. Things can change very quickly, and I think that's the concern for most of us that have raised it.
Thank you. Those are very helpful comments, and I agree with them. One final question from me. Mr. Cardes, you mentioned that significant work, the work was essentially completed on the retirement benefit obligations. Were there any kind of particular findings or adjustments or concerns raised by that work?
Sorry, the new member knows better than me. No, there wasn't. That was really good news. I think the information held by your pension fund and our actuaries being able to talk to their actuaries was really positive. It's, again, a different language to normal auditor. So I was happy to leave it to them, but they didn't have any recommendation for us, which was really good.
Good. To the extent possible, I appreciate it's a significant part of the balance sheet, but it does slightly frustrate me the effort that needs to go into assuring it when, you know, we're not the holders or managers of the pension fund. Obviously, well, not obviously, but it's collated at the county level and pooled from there, and so it's not something that either management or anyone at the council has any great degree of control over. Very subjected to external indicators and fluctuates wildly in value, but ultimately doesn't particularly impact the kind of day-to-day running or operations of the council. So perhaps now that we've got good assurance from this first year, perhaps that will help in future to mean that that's perhaps a bit less of a priority for future years.
It's always going to be a large number in your accounts. I absolutely accept that, for the reader of the accounts, it means nothing. For most auditors, me included, looking at the assumptions that they use, looking at the kind of data that sits behind that and how that's drawn up, again, beyond my scope of knowledge and technical expertise, which is why I have to include our actuaries. The fact that they, who are specialists, were able to get that comfort relatively quickly, and which meant that it didn't impact on our audit at all, means that in the future, absolutely, we'll be able to leave it with them. they'll have that conversation. There will potentially always be a risk because it's such a large number, but the amount of effort and the work that's required to undertake that audit will decrease over time.
Thank you. Please hear it's not impacting on the audit. I guess that's getting to the heart of my question, so thank you. Any final comments or questions? Mr. Tully.
Thank you. I was just to follow up because Rosanna mentioned that the actions are going on to the internal audit system. Just to provide a bit of information and clarity on that. We have our own action tracking system. So we've put them on there because we felt they were good recommendations from colleagues in external audits. And I think your question is a good one about the dates. It is about a date of controls being embedded. But what we can do, being here as a permanent sort of presence, we're very much working with colleagues in accountancy to make sure they are being progressed. So yeah, we've definitely got a watchful eye on that. And we can also be proactive, you know, as we design the controls and improve them, we can learn from as we go along. So yeah, by the time we get to that date, hopefully it should be quite well robust and embedded.
Thank you. That's very helpful clarification. Okay, so thank you. So we set out to review and interrogate these two reports from KPMG, and I think we have done that reasonably comprehensively. Thank you very much, Mr. Cardos, for being here to present them, and thank you to you and your team for the work that you've done over the last couple of months and for the assurance that you have been able to give us on the areas identified. It is appreciated. I think we'll now return to the agenda sort of as originally printed, which takes us to original item 6, which is the annual governance statement and local code of governance. If anyone's desperate, sorry, I should say before that, if anyone is particularly in need of a break at this point, we could break for a few minutes. That was a relatively full-on session.
Mr. Maddock is already heading for the door.
Yes, all right. Let's just take 5 minutes and then resume. Thank you. Thank you. We resume item 6 on the agenda, the annual governance statement and local code of governance. I imagine it'll be Mr. Tully to present this report. Thank you.
Thank you, Chair, and again, good morning to all members of the committee. So we're looking at the annual governance statement for 2023-24. Accounts and audit regulations require the Council to review our governance arrangements on a regular basis and prepare this document, the annual governance statement, also abbreviated known as the AGS, to accompany our statement of accounts. So the main purpose of it is to communicate how we're complying with our local code of governance. Best practice is that you complete this as early as you can. So we did that last year, and it came to the committee and you approved it on the 16th of July 2024. If there are any sort of material governance changes or events arising between sort of the reporting date and the conclusion of the statement of accounts, it's best practice to record that and update the annual governance statement. And we mentioned at the time that could be a possibility. That's really been our approach since 2019-2020, and it seems to be working quite well, and it's now recognised as good practice by CITFA, and they sort of issued a bulletin in February 2024 explaining how to do this because there was a large backlog of accounts across England. So we've attached it for again because we thought it would be good to bring it back to you with the updates. They're not massive, but just for completeness, they are there. We've got them as attached to the reports with track changes. And actually looking at the report itself, if we go to sort of pages 10, 11, section 21, I've also included a table which just summarises those changes. Very briefly to talk to them, I suppose I'd break them down to two different sections. First of all, like the previous annual governance statement update in December, we made the same sort of changes and updated the commentary there. Delays to the audits, the national position, the updated position on the best value notice, and also the outcomes of the peer review. So we updated that for both the previous AGS in December committee, and so we've done it again here for consistency. And then the second thing to talk to is that we also reflected the committee's comments that you made when we previously looked at it in July. And essentially that was two things there. One, it was to add a reference to the Employment and Staffing Committee. We all agreed that that was quite an important committee, so it was good to reflect that under the grouping at the top of main committees to try and talk about what our governance arrangements are. And secondly, we had a look at the accessibility of the documents and the graphics, and we've made just some minor changes there, just to make them easier to read, removing some of the hard-to-read colours. So it's just accessibility improvements. So in summary, we have already sort of approved the annual governance statement, but I think it would be good practice to sort of approve the updated one in advance of the statement of accounts. And so the purpose is just really to talk through the report for the committee. Happy to take any comments or questions, but hopefully that's fairly simple.
Thank you, Mr. Tully. I do feel rather spoiled to have not only track changes, but also a table showing the summary of changes, which is really, really pushing the best practice to new levels. So please make sure that everyone else in the council does this for all of their reports for the rest of time now as well. Councillor Williams, please.
Thank you. Yes, and definitely as well, twice is better than everything else. You're pushing the limits of how much you're testing councillors, making sure they've got no excuses not to be aware. Just on the track changes themselves, on page 17, you've included now a piece on the Employment and Staffing Committee, which I think is right to include that committee. But the wording of it says it deals with the appointment of senior management. Now, yes and no, I think would be my sort of viewpoint of that. So, yes, they are looking at it. Yes, they sort of support and help with the process. But things like the 151 officer, the monitoring officer, chief exec, who are part of senior management, all get adopted by full council. So yes, it goes through Employment and Staffing Committee, but you could read that and misinterpret it as they are the decision makers. And for example, when those panels and the interview panels come, as leader of the opposition, I'm not a member of the Staffing Employment Committee, but I go on. The leader, I don't think is on Staffing Employment, but she goes on as well. So I just think perhaps a little bit more around that, what that means and what their employment is, because I think that could be a bit contradictory in other areas. The other part that I just wanted to highlight, and this is very confusing for everybody, I appreciate, page 20, is that it refers to DLUC, which is what it was, and then it becomes MHCLG. Now, some places it's referred to as DLUC, and some places MHCLG. I'm just wondering whether we should put in brackets MHCLG for when it's DLUC and DLUC the other way around. Otherwise, you could think that there are these two national, when actually it's the same one that's just changed names, if that makes sense. So they're my two comments. But very much, you know, I appreciate a track change. And the summary is just the cherry on top.
Thank you. Mr. Tyler, do you think, can we approve this, well, not to prejudge, but if we were to ultimately approve this, but subject to maybe just a tiny bit of redrafting just around the description of employment and staffing, just maybe if we refer back to the terms of reference for that committee, we can probably draw some slightly tighter language as suggested. And similarly, just think about, or maybe just a little note somewhere about that endless change in the name of that particular government department. Who knows, it may stay the same for a few years now, you never know. Yeah. Anyway, at least local government's in there at the moment, so, you know, that's something to be celebrated. Any further comments or questions? Councillor Stobart.
Chair, thank you. So I think I agree with everything that's been said. This is a very clear document to read now and well set out, and you know, seeing changes generation to generation, excellent. Just under the peer review, I remember Scrutiny and Overview had a long session looking at the peer review recommendations, and yes, we did dwell a lot on relationships and their quality, and I think we were wrestling with the idea of what reset meant. But I think one of the things that came out, and it may have been then and subsequently, was the importance of our relationship with the parish councils. That doesn't get a specific mention, so I was just going to suggest, because you know, our relationship with parish councils work itself out in all sorts of ways, and you know, we have, for example, the planning service offers tutorial sessions for parish council chairs and planning leads, for example. Now, we can't capture all the details of what the district council does, but that relationship with parish councils is particularly important, and I wondered if that was a place just to underline it. You know. So it's a suggestion. I think it's implicit in what's been written, but should we be saying something about our relationship with parish councils?
Thank you. Perhaps not for this version, but maybe for the next version of the AGS, we could incorporate those comments. Thank you. Any further comments or questions, Councillor Leaming?
Thank you, Chair. Just on page 15, we have, it sort of lists our corporate priorities within the business plan, the priority areas. Those are being updated, they're going through the process of being updated. I'm just wondering whether we can put something in to say that they could be updated in this document once, and if they are approved.
I agree. I think that's sensible when that process is worked through. If we can reflect those as well. Thank you. Councillor Williams.
I think that's really key as well, because in this document there are links, and that's something as well that I think it's really helpful to do the links, but we should appreciate as well that links will expire or they will have changes, which is why it's important that we have the updates on our website as to when things are happening. But maybe that's something we ought to reflect on actually when we're relying on a link to somewhere else, that potentially could change. And yes, with the parish councils, but please don't forget parish meetings. We do have, I think, 8. Okay, 50% of them are in my ward because I've got a very rural ward, but then equally I think they quite often get forgotten because they're not the norm, but they are small but mighty.
Yes, sorry, yes. Yes, going in the opposite direction as well. Yes. Yes, I'll leave that for you to ruminate on before the next edition of this, which I guess we'll see in July. So, Councillor Leeming?
Thank you, Chair. It's a similar thing. Within this document, on page 15, it mentions the state of the district report, but we've also spent quite a lot of time looking at the CPCA dashboard, which would probably be a good thing to add in there too. That's okay. Thank you.
Yes, we should reflect the work done by them as well. Thank you. So I think, I get a sense from the committee that we're happy to approve this, subject to a couple of drafting changes around the employment committee and just the clarification on the government department name change, and then some recommendations, I think, for the next edition, some additional content to include. Are we all happy to agree that? Thank you. So, thank you. So we've approved the updated annual governance statement as requested. Thank you, Mr. Tully. We come to item 7, the 23-24 accounts, which we are asked to approve the final version of these accounts, reproduced at Appendix A of your report. Could I please ask Mr. Maddock to introduce this report and the accounts?
Thank you, Chair. So the accounts are presented for approval. Just to say that the audit itself commenced towards the end of October. The aim was to get it completed by Christmas. I think it was recognised fairly early on that was a little bit optimistic given all of the other pressures around the budget. KPMG, as was said earlier, it was their first year of audit. It was fairly clear that they worked in a different way to EY. I think all auditors work slightly differently, and getting used to the way they work and them getting used to the way we work probably ate into some of the audit time more than perhaps we'd hoped. We have to get the accounts signed off by the 28th of February. There are a number of processes and sign-offs that need to be carried out between the approval of the accounts and the end of February. So that process will be going ahead as soon as we have approved these accounts. In the event, the auditors did actually get through about 85% of the work that they set out to do, which I actually think was actually quite good given the lack of time that we had. We always knew the accounts were going to be disclaimed. The disclaim itself will probably have some other bits and pieces in it as opposed to just a disclaim of opening balances, which is what was perhaps envisaged at the start. But I think it's fair to say them being on site was a positive. I think if they hadn't been on site, we wouldn't have got anywhere near 85% of the work done. I think both us and them recognise that. And I do think, as Mr. Cardoza said, I think it does stand us in good stead for the next audit, because there was significant work that was done that should next time take less time. They did find a number of presentational adjustments and other items which I've listed. I'm happy to go through them. If members would like, there's also a balance sheet comparison at page 37. So the blue column there shows what the position is now, and then the sort of orangey colour, whatever you want to call it, shows what the position was when we first published the accounts. And then you can see the differences between what we did have and what we now have. The overall effect on the balance sheet was 727,000. But as you'll see, there's basically movements between a number of different categories. So paragraph 8, so there were a number of adjustments within plant, property and equipment, but the two largest ones are noted there. There was an accrual that wasn't put in. I don't know the full details behind this one. We believe it was just a one-off omission rather than anything more drastic than that. But it's probably worthwhile, and I think we spoke about this yesterday. We spoke about our accruals process, cut-off and all that, and making sure that we're absolutely crystal clear on when the cut-off is and how we approach the cut-off. just to make sure we can eradicate any possible creditors that are accruals that get missed. Our system is pretty good at notifying of those, but this one slipped through, and because of the size, we felt it was right to adjust for that. 169,000 was some values that weren't included in initial accounts because the valuer hadn't completed those valuations. So they were actually added in because obviously the valuer hadn't done those in time, which was slightly unfortunate. There was an investment that had been classified as short-term, which should have been long-term. The definition is obviously a year is short-term and anything over a year is long-term. I think there's a learning point there around a double check on items like that, because one of our colleagues will do those assessments, and it's probably worth a quick check just to make sure they've done that accurately. And maybe that wasn't carried out this time round, but going forward, fairly quick job just to double check that we've classified short-term and long-term correctly. With regard to pension assets that fall within long-term debtors, there was an understatement of 1.175 million due to an error by the actuary, which the auditors picked up, so we've made that adjustment. And in the 22-23 accounts, it appears that there was a creditor that was adjusted in 22-23 and written off, which we shouldn't have done, so that was reinstated. So overall, the effect was £727,000. We've put those adjustments through. We've sent a set of the accounts to the auditors. They will need to review them just to make sure that they're happy with the changes that we've performed. And hopefully there won't be anything else. As Mr. Cardo said, there's one or two bits and pieces they are still finishing off, so it's possible something else might come up. But you know, they are, to all intents and purposes, the audit has now been finished with, bar all the final procedures. So there'll be a letter of representation, Chair, for you to sign at some point, the usual sort of, and then we'll need to sign off a set of the accounts ahead of the backstop day. But I'm going to suggest we actually leave the signing, and just in case there's anything else that crops up. I'm not expecting it, but just in case, and it may be that we might need to make committee members aware of anything that crops up if it's significant.
Thank you, Mr. Maddock. Yes, that's, so ideally the committee would approve these accounts and I would sign these, and I would sign them today, but do you think it wise to just delay that process by a couple of weeks?
I think my feeling is that are we able to approve them as they are, subject to any changes, and come back? I mean, I'm not, I think it's unlikely there'll be any changes. So I'm pretty confident this is the final set. But I can't say absolutely 100% given the additional month that we've got. With the last two sets of accounts, we literally had a week and they weren't being audited, so there was no chance of there being anything else crop up. I just think it's pretty unlikely. But
yes, I'm just not sure as
what
to
what committee's view is on that.
Yeah, I'm just not. Let me think about that while I take some other comments and questions. Councillor Williams.
Thank you, Chair. I've got a few points, so I'll take them in turn. But just on the recommendation, if you are minded, Chair, to revise the recommendation that the committee approves subject to minor amendments, then I think that would give enough coverage if there are, because technically if there's a typo in the report and we've approved it, it can't be fixed without coming back to us. So I think anything major, then it should, but not something like that. So just on page 37, it's just about the values. So when we look, normally I'm sort of guessing that our property, plant and equipment is not 703,000. I'd expect it to be more than that. So I'm just wondering if the triple naught value at the top is missing potentially from that table. Is it? That's a relief, because if our total reserves have gone down to 584,000, I was going to be asking a lot more questions, to be honest with you. So that's one thing that I think needs to be updated. One thing on page 47 as well is, I've not got an issue with it, but monitoring officer, we've gone from 0 to 109,000. So I'm wondering if that's because we've reallocated something, but it just looks like a bit of a rogue thing from the previous year. So that's the monitoring officer. Then on page 64, on the other operating income and expenditure, we include sort of the money going to parish councils and their precepts, but we don't include precepts for county and mayoral. I'm just wondering if that's because they're dealt with differently, or just when I was looking through this, I was like, okay, that's the money we collect on another's behalf, but they're two that appear to be missing. Then I've got on page 71, our provision for bad debt has, I would say, quite a significant change. So I'm just wondering, is that because we're a bit more stable now, local economy, so we don't think there's going to be so many issues? And just two further, Chair, small ones. On page 79, on the table on the right-hand side at the bottom, it says about exit packages. And one exit package was 119,000 for a compulsory redundancy. Now, there is a threshold for where exit packages need to come to full council. We've occasionally had to do that. I'm just wondering if we could be reminded what that threshold is, because that seems something that previously would have come via full council, and I'm not aware that it has. And then lastly, on page 80, you can see where we've, on the right-hand side, the appointments. Now, when we were going through the purchase of Camborne Business Park Limited, one thing that was referenced through the debate and we were told was going to be looked at was, if you look on every other single one, there is a councillor, except for this. So it seems an anomaly, easy for me to say it, come approaching lunchtime, about governance there. That's not a reflection on officers, but it just seems out of sync. I'm wondering why the sort of view, which I believe was a majority view, that we should bring it in line with the other governance arrangements, hasn't been taken place. That's it, Chair. Happy to repeat if required at any stage.
Thank you. Mr. Maddock, did you want to come back on any of those points?
So on the 109, now I believe we did change the way we allocated costs as part of the budget. So within 22-23, the monitoring officer would have been fully reallocated. In 23-24, the general fund element of it would still be showing. So that's the cost of the general fund of basically the legal services team. The parish precept question is an interesting one. So when we draw up our accounts, the government view parish councils as being part of us for income and expenditure purposes, whereas the other preceptors, they don't. So as part of our income and expenditure, we always report parish precepts. So although we show the expenditure in, is it note 10?
It's 9 other operating income and expenditure.
Yeah, so
maybe a little supporting note to explain that would be helpful, just because if you're looking at it from the outside, it looks irregular.
Yeah, so note 9 includes all of the parish precepts, but under 11, taxation and non-specific granting, and the council tax that we collect on behalf of the parishes is shown there. So the two figures effectively net off in the end, but we have to include it because they're counted as our expenditure by central government. What was next? Bad debts, was it next? Bad debts. What page was that? Remind me again. 71. on the right, so on bad debts, was the point that the figure's gone down a bit, or was it one?
Chair, if I may, clarification. Yes, the bad debt provision has gone down, which I'm not opposed to, but I'm just wondering what factors are there. So is it, I can see there's obviously a big variable in NDR arrears on the council share between the 2 years. Is that a one-off, or was there a peak? Is there some reason for that variance? And if it's something that we should see the bad debt provision potentially go up in the current economic climate, or is it something that we think will now remain a bit more stable?
So both the NDR arrears and the council tax arrears, they're not just the arrears in relation to charge payers, they also include amounts on the collection fund that we haven't distributed. Those figures can be a little bit volatile. I mean, it's generally the case that it appears as part of our bad debt provision. It's difficult to say where it's going to go, I think, to be honest. I mean, generally, as amounts due from customers go up, so the provision. But obviously, I can investigate why that's gone down so much. I'm not sure off the top of my head, but it's probably to do with the collection fund position in relation to our NDR arrears. I need to check on the exit package question on the ceiling that you referred to, so I'll check on that. I can.
Yeah, if I can, I can't remember if it's 100 or 150. But it is one of those things, because it doesn't happen quite often, it can sometimes be missed. But obviously, if it is 100, then we would have a governance issue. It may be that it's 150, but I'm not sure.
Yeah, okay, so I'll check on that. And the point about Camborne Business Park Limited, whether there should be a member, I think that's something I'd need to. Obviously, I'm named on there for the next couple of months, but then it'll be somebody else. Yeah, okay, so I'll take that away. And yeah, okay. Well, the other thing to say is that we have been going through. I don't know whether I've mentioned this before. We have been going through a governance review in relation to our companies and these organisations, and that will be being reported back at some stage. I'll need to refresh my memory. That may have been a comment within the report. I can't remember off the top of my head.
Thank you. Any further comments or questions on this report? And we have covered a lot of this ground as part of our earlier discussion from the KPMG perspective. No, thank you. So we're being asked to approve this final version of the accounts for 2023-24, reproduced at Appendix A, subject to any minor alterations that may come to light in the next few weeks, which will be notified to the committee. Are we happy?
And the inclusion of those noughts.
And yes, and the inclusion of suitable units where not currently provided. Are we all happy to agree that?
Agreed.
Thank you. Thank you, Mr. Maddock. You're up again for item 8, which is the anti-theft, fraud, bribery and corruption policy, in which we are being asked to consider adopting. Thank you, Mr. Maddock.
So I'll just give a brief introduction, but my colleague Tara Upbeam-King, who leads our fraud team, is here and may want to comment, but she's available to answer any questions a bit later. So the committee may remember that the fraud strategy came through probably, I want to say September, no, it might have been July. So we updated our fraud strategy. We generally update these strategies where possible around about the 2-year mark. So we felt it was right to update the fraud strategy first, and then my colleague has moved on to the anti-theft, fraud, bribery and corruption policy and procedures. So that's presented here today. It's been through a consultation process with other officers across the council, and so we've had feedback from them, and comments where appropriate have been included within there. I think I said any more on that. Just open to questions and comments.
Thank you, Mr. Maddock. Any comments or questions on this proposed policy, please? Yes, thank you.
Yes, thank you very much. So I was very fortunate to have advanced sight of this prior to Christmas and fed in my thoughts at that particular time. It's really good to see they've been incorporated, and I think it's looking really good. Really good also to see that South Cambs is seeking to be on a preventative footing when it comes to fraud rather than purely reactive. And the adoption of good practice in there as well is good to see. It's very forward thinking. My question though is, with any policy, it's about how you then bring it to life. So what are you planning to do with any new obligations in here for council staff to make them aware of it and then hold them to account for that in line with the values?
Thank you, Mr. Freeman. Who would like to take that question? Ms. Nutman Kim?
Thank you. Thanks for the question and thanks for your comments. Okay, so in terms of making everybody aware of what their responsibilities are, we've got a few methods to be able to communicate the messages. So you'll be aware that we've started our fraud drop-in sessions. So what we would do, subject to approval of the policy with any kind of amendment, is to start to draw out those key areas, to invite staff to come along and have a discussion about what their responsibilities would be at those drop-in sessions. We've also looked at things like when we develop our awareness training, that there is going to be, obviously, it's just not general fraud awareness training, but how does it relate to the responsibility section of the policy in the way that we satisfy the strategy. Also looking, interestingly, at the different layers that we have, and we might need to adapt some of the information that we give between the risk owners and how they might need to respond, to those people that are operationally on the front line, what tools they might need, and what they may need to be aware of just to be able to satisfy their responsibilities. We'd actually spoken at the time that we did the strategy around how we would embed responsibilities, and we were taking that forward with HR as well around how that should be introduced potentially into the job descriptions in the same way that it is with health and, have regard to health and safety, etc., just to make sure that people understand the importance of it. And you'll be familiar, we have a resources page to staff as well. So on the resources page, subject to obviously approval, the new policy will go on there and the highlights will be drawn out, points of interest that need to be particularly noted, and that would be one of them. Just so that the staff have that for reference. So yeah, that was the initial thoughts around that.
Yeah, thank you very much. That's very helpful.
Thank you. Just to build on that, and I'll come to you in a moment, Councillor Williams. I note in the policy that one of the first kind of port of calls for a member of staff who suspects that that fraud might be underway is to speak to their line manager about it. I wonder what training are we or what advice are we providing those line managers so that they know how to appropriately respond in the instance that they get a referral from a member of their team?
Thank you. I think again with the general fraud awareness training that we intend to roll out, and with the snippets, you'll have seen that we've done some bite-sized training videos just so that they can go out virtually, just to keep reminding people that we talk about the processes. I'm fairly confident. I've had something that has been sent to a line manager just in the last 2 days around an issue that has then been forwarded to me, that there's a general understanding already. I think that we are starting to make way in terms of our profile we're a bit more visible. People know that we're contactable, so we can certainly, introduce that to all. We could tailor, if you like, the way that we provide training according to different sets or layers of people. But I'm fairly confident that people are aware of the processes and where to report now, more than perhaps they have been. And I just think what's happened in the last couple of days and I can't go into detail about it, was just really encouraging that the action that the member of staff initially took, I think shows that we've moved on from where we were in our maturity and our awareness around fraud to that being sent to the line manager, it coming straight to me, and then I will do what's necessary in terms of speaking with internal audit and John Murphy as well. But it was really encouraging, and I think it shows that we have moved on in terms of general awareness amongst staff.
Thank you. Councillor Williams.
Yes, thank you for bringing the policy to us, and it's something that obviously as a committee we've all been eager to pursue, so it's great to see it. I'm just wondering, having referenced the importance of being careful with links, like a true counsellor, I'm now going to flip it the other way and say on page 135, it may be useful to have the links to those policies in there, because in this case they might be updated and therefore everybody just keeps going to those sorts of policies you want to see the most up to date as opposed to the one that was relevant in the previous document. Because, for example, there are things on there that members and officers, it might be helpful to see the other side, as members will be very familiar with what our processes are, but it could be quite useful to see what the protocol is on the other side of things. So making sure that it's a one-stop shop for everybody to get what they need to would be really, really good. And I completely agree that it is about the implementation and how that goes forward. I'd welcome more not just, we've had some training for audit members. I think there was some sort of training for councillors overall, but if I remember there was sort of a bit of a diary issue with it, if I've remembered correctly. So definitely worthwhile reaching out to members again, because this is something that goes well beyond this committee, actually, and I'd welcome something, even a little reminder coming from the chair of the council or something to full council on this particular policy update, because we are in our communities more than officers, so particularly with things sort of outside and external to the council are going to be potentially picking up more of these issues, and so we definitely need to be well prepared as councillors, and there's probably mixed preparation going on across the board, so anything that we can do, and I'm sure myself and the leader will help with our groups, anything you need from us, and just let us know.
Thank you for those comments. Any further? Councillor Stobart.
Yeah, Chair, thank you. So I was very interested in an article that appeared in The Economist a few weeks ago that went under the title of "Britain is becoming a well-mannered but deceitful society." And so, you know, when presented with a title like that, I read it with some considerable interest. But one of the things it points out is that there's perception, particularly amongst younger people, I need to tread carefully here, I'm just respecting all parts of society, but the article did say that amongst younger people, those more influenced, if you will, by the digital basis of our society, are perceiving the world slightly differently. So to take a shortcut, to make a misstatement, is, you know, in certain parts becoming more, in a sense, culturally acceptable. So I wasn't proposing that for particular action, but just to highlight the fact that cultural shifts take place, and I wanted to ask you know, in regard to the policy, that we were properly regarding cultural change. Now, of course, so-called internet influencers have a big effect, and there can be spikes in behaviour, I guess, you know, as certain information, you know, emerges. Are we ready for that? And is our data policy, we have put a lot of emphasis in you know, here and in, you know, in other discussion forums on the importance of data and managing data. And there is a small but very busy data team at work. So are we using those resources well in the face of what might be sometimes unpredictable changes in the way people conduct themselves and may adopt fraudulent behaviour?
Thank you for that question. I might come to Ms. Nabin King for an immediate response, but I think some interesting points raised there.
Yeah, I think there's some really interesting things that you've said there, and it touches on some of the things we've explored in the past about if you're looking at the greater problem, how do we start to look at it from the external point of view in terms of education to youngsters who have a very different lifestyle, and then they will come to our services at some point. I think that there's potentially an opportunity around communities and that team, because they do some of the work around what's coming in scams and things like that. But if we've discussed, and we discussed quite a long time ago, what the opportunity might be around that kind of going into the community, schools or things like that, just to talk about it, just to make sure that culturally they realise that for some people they just see it as a problem-solving issue rather than that they were committing an offence. And it's a really interesting one and something to look forward towards in the future. So yeah, that is a really interesting. I can't remember the second half now. Sorry, I was just taken away with.
Yeah, thank you.
Data.
Data, exactly.
Yes. Sorry. We had a discussion on Tuesday at the corporate management team, and the data team was introduced. And I do have some questions for the data team, because I think that we're one of the services that perhaps needs to be a priority to be working with that team when we're talking about the quality of the data we've got, what they're using, what agreements that we've got in terms of sharing information from data holders, rather than necessarily looking at the data we've got that we've collected on the basis that it's good quality. We might need to look at that a bit more broadly with data matching from source. So I think that's an interesting thing to look at in terms of prevention and in terms of this kind of pilots that the Cabinet Office are running on the Digital Economy Act to see if we can make any improvements to improve data, but to improve detection as well. And so I think it's Jay Clark that's heading up that team, and we've just had a discussion on Tuesday about the need for us to look at things collectively.
Thank you. Any further comments or questions on this policy? No? So we've been asked to adopt the corporate fraud policy. Can we please do so by affirmation? Yeah, thank you. Just for clarity, will this need to go through full council or cabinet? What's its onward journey from here, if there is one?
I don't believe so. I mean, our main fraud strategy does, but I think the fact this committee's adopted it, I think that's probably fine.
Good. I think in that case, maybe we can just consider whether perhaps as part of the leaders, or perhaps part of the leaders' remarks at the next full council, we could make reference to this, and just to pick up on Councillor Williams' point about spreading awareness of this to all members, whether the fact that this policy has been adopted and members should be encouraged to look at it. We can find a way to, I mean, I'm not saying we should force it to be a whole item at full council, but whether there's some way that we can get it inserted into the proceedings. Or chair's announcements, yes, that might be the place.
I'll explore that.
If you can explore just a way to get that through, that would be helpful.
Because we've come from a scrutiny position rather than a political function of the council.
A very good point.
It's probably, if it comes from the chair, then that is more appropriate, I feel.
Yes. Thank you. The final item on the agenda is matters of topical interest. Obviously, we've already heard from our auditors. Are there any other matters of topical interest that members wish to raise? Mr. Tully.
Thank you, Chair. I think members remember in November we had our workshop to look at the toolkit from ZIPFA and evaluate good practice. One of the actions from that was to develop a sort of assessment around learning and development areas. So I've been building a survey. I gave it to my colleague Peter as a sense check, just in case I had any obvious spelling errors or anything like that. And I think that's got the nod of approval, so we'll be sending it around shortly for you to complete. Great opportunity, just get a sense check of where we are at any sort of trends or areas where it'd be worth investing some time in learning and development. So that'll be coming out shortly, and encourage you to fill it in. Thank you.
Thank you very much. Councillor Williams.
Just if we have any RIPA updates.
I think potentially because this is in addition to this isn't our regular quarterly meeting, this was an extra one for the joys of account approval, in which we have also added other
You
things
said
as well.
joys with such a smile on your face, Chair.
I'm glad you spotted it. Any final comments or questions? No, thank you very much. So the next meeting of this committee will be on Thursday, the 20th of March at 10 o'clock in the morning, and I'd like to close the meeting at 12:15. Thank you all for your contributions today.
Thank you, Chair.